Good morning, everyone. It was very inspiring to hear from Sir about all the ups and downs that he has gone through in last 40, 45 years of building this company. We had a very different journey, to be honest. It's a 16-year-old company. We started this company in 2008, June. Uh, but our journey has been very, very different because, first of all, we could, thank you. We ended up raising decent amount of capital from very early on. Although when we look at our whole journey, I think we can break it into multiple phases. So what I'll try and do is just give you a bit of overview of different phases of last 15, 16 years of how the company has progressed, what we were trying to do, and then maybe touch upon a little bit about different stakeholders, which are maybe customers, our partners, employees, investors, uh, and very happy to take any questions on the way. So when we started the company, there were three of us who were the sort of founders who signed the SHA and who sort of incorporated the company, but we had a small founding team from day one. The basic concept was that everything needs on internet can be compared very easily. We have looked at few of the models in travel specifically. At that time, Make My Trip, Yatra had already started to scale. Uh, Insurance per se wasn't very top of the mind product in India, but if you look at UK, you had 3-4 names: Money Supermarket, Confused.com, Go Compare, which had started to scale up around 2003 to 2007 period. And what they were enabling was customers to come on the platform, look for car insurance option, which is a very simple product relatively, and people can then go through the transaction. Now, typically on internet, you can make money either by transaction, where you control end-to-end, which is more of Expedia or Make My Trip or Amazon or Flipkart sort of things, or you can make money through some referral or advertising, right? So the second model is usually meta search model or advertising model. So most of the models which existed in UK were meta search, and insurance companies had decently good platforms where the customer can actually close the transaction. We said, yeah, it seems very logical because insurance is pure play digital product. There is no physical product per se. A person can just look at the product, they can look at what is best for them, and they can do the transaction. Now, to give you a little bit of background to why we got into insurance, so my partner used to be the head of e-bookers. Now, e-bookers were a very large OTA in UK at that time. And travel made it impossible to make money in OTAs as such, because the margins are very low, airlines have just too much power, and they decide everything. But insurance, you can make money. And within travel insurance, they were making some money as OTA, so they said, why not? So we started this company thinking that, okay, car insurance is a simple product to compare, so why don't we do the car insurance comparison? Within 3-4 months, we realized that car insurance is not big enough a market and it's not a big enough problem. At that time, there were only two products in insurance that people were usually buying. One was car insurance because it's mandatory, and second was all those investment products which were, sort of pushed by the agents. And both of us come from sort of middle class background, and we are like, why people are not buying health or term life, which is the most important product for a middle class family? So within the first 3-4 months, sort of, we switched on this thinking where we said, okay, let's solve for the financial risk, which comes from the death, disease, disability in the family. And insurance is a very, very good way to create that social security net. We also believe in any economy, especially a country like India, where if we look at today, our GDP per capita is about $2,500, $2,700. If you take away the top 20% of the population, it will fall down to less than $2,000. Now, the middle class in India usually will be about $8,000 plus. Now, if you are talking about that segment of 20%, which is earning $6,000 to about $30,000-$40,000 per year as a household, there is no way government can support that particular segment. Government has to take care of the bottom 75% of the population. But this segment is very aspirational. They don't want to go to government hospitals, they don't want to send their kids to government schools, they don't want to go back into poverty. So what is the option for this? They just have to buy this insurance product. But there was no awareness, there was no product available. Now, none of us came from insurance background, by the way, and we had actually never even worked on finance services industry. So we didn't have those connects, we didn't understand the product as well. But we saw the problem, we said, okay, it's worth trying. So we started reaching out to insurance companies. We started this platform, PolicyBazaar.com. We talked to a few VCs at that time. InfoEdge was the first investor. So Sanjeev came on board within 4 or 5 months of our starting up. We and Zomato were very, very similar in terms of the funding time frame from InfoEdge. And yeah, it seemed like a good thing to do. What we realized was insurance companies were not able to play ball very easily. The thought process that it is a push product was very deeply ingrained in insurance companies, regulator, customer, everywhere. And if you go to them and say, okay, we want to do something like this, there was a decent amount of resistance, and they didn't know us, obviously. So we said, okay, let's survive. How do you survive? So we started surviving by giving the leads. So it became a lead gen business. So we do some advertising, some mailers, whatever we had to do. We'll get customers on the platform, and we'll provide these inquiries to the insurance company. Now, insurance companies had banks partnership, they have agency, and they were very keen to build direct. But no one was going to them. So they said, okay, there's some value to the leads. Around the same time, regulation started to evolve. So there was no regulation. So any financial services business will have decently high oversight of regulators. In our case, it's called IRDAI, which are based in Hyderabad. So they said, what do you do? We explained to them, and they're like, oh, we'll fit you into this regulation, which was something called referral regulation. We said, no, we are not doing what you believe we are doing, because referral regulations are people like Airtel, DLF who have a database, and they pass on their database to insurance company. We don't have a database. Customers come to us. They said, okay, then you are advertising regulation. We said, no, we are not advertising. They said, okay, then who are you? So we sat with them. We actually ended up creating something called Web Aggregator Regulation in 2011. Now, that regulation had, we obviously discussed with them, but they have huge amount of restrictions on 2 parts. One, commercial. Second, editorial. So we were not allowed to do anything which were about commenting on the product or the insurance company. No rating. Even customers cannot rate. Customers cannot comment on their buying experience, anything. So from today's internet perspective, that looks like very archaic. Also, in terms of commercial, we were told that you can make only a very small amount. So we were told that you'll make only 10 rupees per inquiry. We're like, why 10 rupees? And they're like, you get free traffic, we are letting you make 10 rupees, you should be happy. We're like, why should we get free traffic? We have to spend money on Google. And they said, oh, Google charges money, we didn't know. But you have to survive with that sort of regulation for the first phase at least. It was also very challenging because sometimes insurance companies also didn't know what to do with these properly. So, our brand was at stake. It was a very high gross margin business, to be honest. But the customer experience went for a toss. They will sometimes give it to third-party call centers. The data will leak out. All sort of stuff will happen. So we said, okay. Then we also had an issue where, insurance companies' demand was very fickle for us. On 15th of March, they will suddenly say, oh, just stop the leads. On 22nd, they say, oh, again, start the leads. Now, you can't plan your marketing campaigns like that. So it will create losses for us unnecessarily. Also, they will get anecdotal evidence from their call center saying that, you know what, the contactability of the lead is low. So in one of the meetings, which could have killed the company in 2010, it was with ICICI Prudential. In the meeting, they were told us that if we try to call the customer will not pick up the phone. So in that meeting itself, I was not part of the meeting, my partner Yashish was. He did some calculation that, okay, if we call the customer first, ask customer, do they want to be called by this 1, 2, 3 companies, and then pass on? How will the dynamics change? He called us from the meeting. We just did some calculation. And from next day, we started giving contactable leads. So we had talked to the customer first. and then we'll pass on the lead to the insurance company. So the contactability will not be the question because we will have recording of the customer. But all these changes happened overnight. And one of the reasons we could survive, because iPro at that point was about 50-60% of the partner for us. So it was a very, very big contract for us. So we continued with that sort of journey for first 3-4 years. Collections was a big issue at that time for us because, a lot of these contracts from insurance companies were not coming directly to us. They were coming through advertising agencies. Now, advertising agencies sometimes will delay the payment because they'll get the payment from the insurance company, but they'll hold on to it for whatever reasons. So we'll try every stunt in the book to figure out how do you get your money. We'll figure out to somehow get into their systems to check if they have paid service tax and they have done all that stuff so that at least they have recognized the liability in their books. If we go legal with them, we'll write to their directors, we'll do whatever it takes. In one particular case, still they were not paying. So we had a BD person, young girl at that time. She went to the advertising agency office and just said there, it was 8 o'clock, 9 o'clock, 10 o'clock. She just didn't move from there. And then the owner of that agency called us, said, please ask her to go home because I can't close my office. I'll pay tomorrow, don't worry. There were 2 instances where, because our collections were lumpy, because it was insurance companies, they will sometimes pay for every month, sometimes they'll pay once in 6 months. So there were 2 instances where we didn't have money for the salary because the info edge money didn't come as one shot. They are also corporate, so they wanted to optimize their own treasury. So we used to get a small amount every few months, and we used to go with begging bowl to them every few months. So on 30th, once we thought that we didn't have money, so we said, okay, who all can delay the salary for 2 days, 3 days? Let's get the volunteers. Now, by chance, we got some of the money, and people had volunteered, so we could pay through some people. Now, one of the person who got the money actually got very upset. She said, you don't consider part of the family, part of the company. If this person not got the salary and you have got the salary, how did I get the salary? Because I have said I also can delay for 3 days. He said, this is a big problem, yaar. Paise do to bhi log kuch nahi hai. So we then said, okay, let's twist the problem in a different way. We then said, if by chance there is a collection problem, BD will get the salary, others will not get the salary, and everyone will know that BD has got the salary who had to collect. It created so much pressure on BD that we never had collection problem after that for last 16 years. Because these are our friends, right? And how can you let your friends down? And you are getting your salary. They can't stop me from electronic transfer. So we used to do all sort of such stuff. So lead gen was the first phase. And then obviously customer experience, as I said, was not great. So we said, okay, we have to do transactions on the website. So we could get the customer to stage A, and from then onward, we'll transfer to insurance company portals. Now, insurance company did not have those portals sort of time, so we'll build those portals for them. We'll get their products on their websites so that the transaction happen. But still, the experience was totally broken. The third phase was where we said, okay, we have to do end-to-end. So customer who comes to PolicyBazaar will go to the journey on PolicyBazaar, make the payment, get the policy. Now, in that also, there's a twist because legally we're not allowed to take the payment. So anytime anyone pays on PolicyBazaar, we never get a payment. It is directly routed to each and every insurance company's account only. And that's why the refund from PolicyBazaar is not very easy for us. Because we don't get the money, we are not allowed to pay back. Now, in that case, again, there are most of the insurance policies in term and health insurance require a medical test and document collection and some other stuff. So, because the process has so much friction, and those are back-end systems, we are integrated with the front-end systems. How do you know whether medical has happened or not happened? So my team is calling up customers, sir, please go for medical. And customers saying, I've already got the medical done yesterday. Why are you calling me? So the next phase was where we had to go into deeper back-end systems integration then. Again, a lot of resistance. Those systems are not created for integration. They are in closed systems. But we could do it one by one by one. The phase we are in right now is where we are going deeper into the whole value chain. What we are trying to do now is, we are saying, okay, can we work together with insurance companies to create the products? So we have actuaries in our team for last 7-8 years who are working with insurance company actuaries, looking at small customer segments and figuring out what sort of product is fit for this segment. What are the risks that's presented by this segment so we can remove the friction from the buying process as much as possible. and also getting into the claim handling, whatever is allowed and whatever we can do today. But the aim is that we need to control the customer experience, because all the companies are different, all the companies will have different customer experience, so we have to go deeper and deeper. Now, while we are doing this, we also ended up creating PaisaBazaar. Now, someone should ask, why PaisaBazaar? You are doing PolicyBazaar, you are doing okay, why PaisaBazaar? So, the story behind that is also a bit funny, because we actually had a tab on PolicyBazaar called credit. In one of the meetings with the regulator, we were told, you cannot do credit on PolicyBazaar. I said, why? SMC does it, Bajaj Capital does it, a lot of people do it. So why should we stop? No. You are a web aggregator, you cannot do anything which is non-insurance. So we already had a business and team, so we said, okay, let's create another portal, another web platform. Now, obviously, it requires a lot more investment, a lot more headaches, because PaisaBazaar at that time, or whatever, that loan tab was a CRM tab. We're not building a brand. We're just trying to monetize more. But PaisaBazaar became a totally different business over time and did quite okay and scaled up. So as we think back, there were three things that, worked for us. So first of all, I think I would like to openly say that I am not a person who can be ever a single founder. Single founder is very, 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 very tough, as per me. The ups and downs that you go through, you can't really share with anyone else if you do not have a co-founder. So it's a very tough journey for a single founder. So hats off to anyone who's a single founder. I'm by nature an optimist. So even if other people are feeling down for some reason, I'll sort of manage to pull them up. But starting on the journey, we all know, 3 times in a day you feel this is the best thing to happen, and 3 times in a day you feel like, oh shit, kya kar liya? But, what people don't realize outside is, for founder, this is 0 or 1. For a lot of investors or employees or anyone else, it is an option. But founder की तो जिंदगी यही होती है, उसके बाद तो कुछ है ही नहीं. या तो 0 होगा या 1 होगा, 99 तो होता ही नहीं. Right? So, these are the things which, somewhere don't get appreciated that much. In our case also, we obviously had a very low salary when we started. And for whatever reasons, for first 5 years, it didn't change. I had a small baby, I just bought a house, costs were increasing, my partner's family was living in London, kids going to private school, impossible to pay their fees. It was very, very, very tough those 5 years for us, obviously, personally as well. So in my case, my wife had to work. There was no option for her not to work. नहीं तो घर कैसे चलेगा? 2008 to 14 was a tough period. People who were with us at that period went through the same ups and downs with us. 14 was the time when we got Tiger in Global as the investor, and we got a lot more confidence as a team and as founding team that, okay, now we can survive, because, Tiger is a big name. And we got decent amount of money because of that. Again, a lot of times, when it comes to fundraise, people think that it just happens. And especially with someone like Tiger, when, Lee Fixer will come to India and he'll get the term sheet and ho jata hai. What people don't realize is Lee Fixer spent 3 years with us, meeting us at least 10 times. But the day he decided, he moved in 24 hours. But that 24 hours took 3 years. And that is what you have to go through. With SoftBank also, we had to spend 2 years, 3 rejections that they said we won't do this funding. But finally, we managed to convince them. So, after 2014, we actually used to target that we want this investor and we'll go full hog on that investor. Now, for some reason, there are 3 things in terms of ethos which I want to highlight about us. One, we will do whatever is right for the customer. So customer lens is the only lens for us. Or we'll be fair to the partners, but customer lens is the only lens. Second, as a company, we'll try and look for medium to long term, not optimizing short term. So there is about 6% revenue which we lose out today because of the fraud control mechanism that we have created internally. Because the policies don't get issued, we don't get paid. But that's the right thing to do because it improves the quality of book for insurance companies. And third, as a company, for some reason, we are more build people, not acquire or invest people. So we do everything in-house. Our dialer is built from scratch. Our CRM is built from scratch. everything that we do is built from scratch and in-house, but that gives us huge amount of capability. So, that's where we are today. Hopefully, we'll continue to go deeper in terms of customer experience control and see exactly how do we influence the actual delivery of the service for which insurance is paying, which is your car in the garage or a patient in the hospital, and how can we influence that as well. Thank you very much.